Imagine setting up your dream business in Dubai. The sun is shining, there is zero personal income tax, and you're finally living the tax-free lifestyle you've been dreaming about. And then, 6 months in, you get slapped with a massive fine because you didn't register for corporate tax on time. Or worse, you discover you've been calculating your VAT incorrectly, and now you own thousands of dirhams in penalties. Sounds terrifying? It should. Because the truth is, while the UAE offers incredible tax advantages compared to countries like the UK or France, Belgium or Italy, there's still critical compliance requirements that can make or break your business. And the worst part is that most entrepreneurs don't discover these regulations until it's too late. Today, I'm pulling back the curtain on the UAE's corporate tax and VAT systems, revealing exactly what you need to know to protect your business. Whether you're already operating in the UAE or just considering a move to escape high-tax jurisdictions, this video could literally save you thousands of dirhams. Stick around because we're diving deep into the rules that nobody tells you about until it's too late. Hi, I'm Hisham from Emifast. We help entrepreneurs maximize their income and minimize their taxes with smart global relocation strategies. Visit our website at emifast.com to explore our resources or to talk to one of our consultants. We are happy to help. The UAE has built its reputation as a tax haven, and for good reason. With 0% personal income tax, no capital gains tax, and no wealth tax, it's a financial paradise compared to high-tax countries like the UK, where you could be paying up to 45% in taxes. But here is what many entrepreneurs miss. The UAE does have corporate taxes and VAT, and failing to comply with these regulations can lead to devastating consequences for your business. Today, we are breaking down everything you need to know about UAE corporate tax and VAT, from registration requirements to filing deadlines and even strategies you could use to minimize your tax burden legally. By the end of this video, you'll have a clear roadmap for navigating the UAE tax landscape like a professional. Let's start with corporate tax. Now, for years, the UAE was known for having zero corporate tax, but in 2023, things changed. The UAE introduced a 9% corporate tax on profits exceeding 375,000 dirhams, or roughly $100,000 a year. And here's where things get interesting. If your business generates less than 3 million dirhams a year, more or less 800,000 US, you qualify for a small business relief, which means you still pay 0% tax until the end of 2026. Sounds amazing, right? But there is a crucial detail many entrepreneurs miss. The small business relief is currently set until the end of 2026, but there is a good chance it will be extended until 2029, another 3 years. However, if your revenue exceeds that 3 million threshold at any point, you'll immediately fall under the standard rule of the 9% corporate tax on profits exceeding around 100,000 US or 375 dirhams a year. Let me share a real example of one of our clients, a tech startup founder from the UK. Moved to Dubai thinking he'd completely escape corporate taxes. His company was making around 2.8 million annually. He was under the threshold. Perfect, right? Not exactly. In his third year, he landed a massive client that pushed his revenue up to 3.5 million dirhams a year. Suddenly, he found himself not only liable for the 9% corporate tax on all of his profits, or exceeding 100,000, moving forward, but also potentially facing back taxes. The solution? He restructured his business model to ensure he stayed below the threshold, while still being able to scale his company through different ways. Now here's another critical point, the corporate tax registration. You need to register with the FTA within 3 months, 90 days of getting your business license. Miss this deadline and you're looking at penalties starting from 10,000 dirhams the day after you miss this. So be careful. You might be thinking, no problem. I'll just make costs or pay myself a huge salary to reduce my profits to avoid corporate tax. Well, the UAE authorities are one step ahead of you. Your salary must be within a market range. I would say approximately 10 to 12% of your company's yearly revenue is pretty realistic. Anything beyond that, the tax authorities might reject it as a deductible expense. For instance, if you're running a small digital marketing agency with around 1 million dirhams revenue a year, paying yourself 500,000 dirhams salary will raise some serious questions from the FTA. The market rate for a marketing director in Dubai might be closer to 250k dirhams a year or 300k dirhams a year, I would say. But of course, it depends on your business. Pay yourself significantly more and you might get questions from the FTA or in trouble. This trap I've seen countless entrepreneurs fall into. They think being clever, extracting profits through inflated salaries, only to find themselves facing additional tax liabilities and potentially problems or any issues during an audit. Speaking of deductible expenses, let's break down what you cannot deduct from your taxable profits. You have your 100% deductible expenses. These are expenses exclusively for business purposes. For example, if you're running a software company, the cost of hosting services, software licenses, and developer tools would be fully deductible. Then the non-deductible expenses. Certain expenses cannot be deducted at all, such as fines, penalties, anything entertainment, or personal expenses disguised as business costs. These, the UAE tax authorities are particularly vigilant about the last category. Now, let's move on to VAT, Value Added Tax. The UAE introduced a 5% VAT in 2018, which might seem low compared to European countries, which are typically around 20–25%. Compliance is still critical. Here is what you need to know about VAT registration. Companies must register within 30 days of reaching 375,000 dirhams revenue, more or less 100k US. There's also optional VAT registration available if your revenue is roughly half of that. Why would you register voluntarily? Because VAT registration allows you to reclaim VAT on your business purchases. For businesses with significant expenses but revenue just below the threshold, this can be a smart move. VAT rates vary depending on what you're selling and to whom. 5% VAT applies to most local sales within the UAE. For example, a Dubai-based interior design company charging a UAE client would apply 5% VAT. 0% VAT applies to specific goods or services when exported outside the UAE or between free zone to free zone companies. Exempt out-of-scope transactions include residential real estate rentals, undeveloped land sales, or certain financial services. Here is where businesses often make costly mistakes. Imagine you're running a consulting business in Dubai, serving both local and international clients. Your services to UAE-based clients are subject to 5% VAT, while services to the international clients might qualify for 0% VAT. Mix these up and you could either be overcharging your clients or underpaying your VAT, both of which can lead to serious consequences. Filing deadlines for both corporate tax and VAT are non-negotiable in the UAE, and penalties for missing them are significant. For corporate tax returns, you must submit within 9 months of your financial year end. For instance, if your financial year ends on December 21st, your corporate tax return is due by September 30 the following year, 9 more months. VAT returns are typically filed every quarter, even if you have no activity to report. That's right, even if your business has 0 sales in a quarter, you still need to file a return. Failing to do so can result into penalties up to 10,000 dirhams per missed return. Be careful there. I remember one client, a freelance photographer who had moved to Dubai from France, who thought they didn't need to file VAT returns during a slow quarter when he had no projects. He was shocked when he received the penalty notice. The lesson: in the UAE, tax compliance doesn't take a break, even if your business does. Once you've registered for VAT, you must file your return and make any payment within 28 days, so within a month from the end of your tax period. Miss this deadline and penalties start stacking up. Let's talk about what happens if you don't comply with these regulations. The consequences can be severe. Late filings can result in penalties of 10,000 dirhams per missed return. Incorrect tax calculations can lead to additional assessments, plus penalties and interest. Failure to register for VAT when required can result in penalties of 20,000 dirhams. But beyond the immediate financial penalties, there is a bigger risk. damaging your relationship with the UAE authorities. We don't want that. In a country where business reputation is everything, being flagged as a non-compliant company can really impact your ability to secure government contracts or obtain additional licenses or even renew your existing permits. Given these complexities, trying to handle UAE tax compliance on your own isn't just risky, it's potentially disastrous for your business. And that's exactly why at Emifast we don't just advise on tax strategies, we provide complete accounting services for our clients so they don't have to think about these things. Why do smart entrepreneurs choose smarter accounting? I'll tell you why. First, it's about peace of mind. Imagine never having to stress about VAT registrations, quarterly filings, corporate tax returns again. My team will handle all that tedious stuff while you can focus on what actually matters, growing your business. Second, we don't just file your tax and call it a day. We actively hunt for legitimate strategies, ways to minimize what you owe. Our accountants live and breathe UAE tax legislation. That's why they know exactly how to structure your operations to take advantage of every deduction, every exemption that is available to you. And lastly, let's face it, tax rules in the UAE change constantly. When you work with us, you're always one step ahead of these changes. No surprises, no compliance, no headaches, just smooth sailing while others struggle to catch up. It's not about paying for accounting, it's about actually investing in a financial optimized system for your company. And if you ask our clients, the investment pays back itself many times over. Let me share a real example of one of our clients, a UK entrepreneur who relocated to Dubai to run his e-commerce business. Initially, he tried to handle his own tax compliance, as he said he can, as he did in his home country. After missing a VAT deadline, receiving a penalty, he decided to reach out to me and work with our accounting team. Not only did we resolve his penalty situation, but we also restructured his business operations and identified several legitimate deductions he had missed previously, ultimately saving him up more than 20 times what he paid for our services. By partnering with Emifast for your accounting needs, you can focus on entirely growing your business, while we ensure every aspect of your tax compliance is handled professionally and optimally. So what's the bottom line? The UAE offers incredible tax advantages compared to countries like the UK, France, Belgium, or Italy. But it's not a total free tax paradise. Understanding and complying with corporate tax regulations, VAT requirements are essential for protecting your business and maximizing your tax benefits legally. At Emifast, we don't just advise, we deliver complete accounting solutions. We've guided hundreds of entrepreneurs through these complexities, handling their day-to-day accounting while ensuring they remain fully compliant with all UAE regulations. Our clients sleep well at night, knowing their tax affairs are being managed by experts who understand every nuance of the UAE tax system. Whether you're already operating in the UAE or you're considering relocating to escape a high-tax jurisdiction, partnering with Emifast means you'll never have to worry about tax compliance again. I hope this video has given you a clearer understanding of the UAE tax compliance in 2025. And if you found it helpful, please hit the like button and subscribe for more insights on global tax strategies and business optimization. The next step is simple. Don't wait until you're facing penalties or struggling with tax filings and VAT registration or maybe missing deadlines. Schedule a consultation with us today by visiting www.emifast.com or click the link in the description, and during this call, we'll discuss your specific business situation and show you exactly how our accounting services can save you time, money, and endless headaches. And remember, in the UAE, having the right accounting partner isn't about just compliance. It's about optimizing your tax position and protecting the wealth you've worked so hard to build. Let's plan that conversation today to see what we can do for you. Thank you for watching, and we'll see you in the next video.